Good morning, everyone. Thanks very much for being with us for this very special live podcast episode. We're going to discuss the medium-term budget policy statement today, in which President, it could as well be the President, in which Finance Minister Tito Mboweni saved South Africa yesterday. Joining me today, a very special guest and someone who I am very privileged and honored to talk to, as always, who I always learn a lot from. We have Dawie Roodt, the Chief Economist at the Efficient Group. Dawie, thank you so much for being here.
My pleasure. Good morning to you. Good morning to everybody. Thank you.
So Dawie, the floor is pretty much yours. Are you going to tell us about how the Finance Minister saved the country going forward? I have a few questions I'd like to ask you at the end, but for now, I think the only way to sort of rip, as people say, with pain and injuries, maybe sometimes you just have to rip off the plaster and dive straight in. So please go for it.
Okay, thank you. I just want to check you can see me okay and you can see the presentation. It says international context. Is that correct?
Yes, that's correct.
All right, I'll go from here. Okay, this is it's quite a long presentation. I'm going to go through the whole thing, but I'm not going to touch on each and every point in the presentation because it will take us 2 hours or so. So I'm just going to sort of skip through this presentation. And maybe make a few notes if you want to, and afterwards we'll be happy to try to answer questions if there are any questions. Okay, let's get going with the intent. I think the context is always important, and context certainly is that of a new political world taking shape. I don't want to spend time on that, but Brexit, Trump, and all that. But that's important to us because that will affect things like trade patterns. We also have very high levels of state debt international. Monetary policy is totally unorthodox. Interest rates are exceptionally low. And then the South African rand is quite often seen as a proxy for international stability. And it's pretty much a risk on, a risk off kind of thing happening internationally. When there's good news internationally, money comes into South Africa. When there's bad news, money leaves South Africa. So that is the international context. The local context, we are in a very, very deep depression in South Africa. It's caused by the lockdown, but we were in trouble before as well, mostly because of a collapsing state, incompetent and corrupt government that we have. Things are changing, certainly. Cyril Ramaphosa seems to be consolidating his power, but we still have major issues as far as the efficiency of the state is concerned. A lot of ideological issues like South African Airways being saved. So there's a lot of ideological confusion. Battle lines are being drawn between, for example, COSATU and the state, and then the recovery plan of the president. Remember, there are about 9 million people receiving grants from the state and about 2 million civil servants getting paid by the state as well. And there are about 14 million people working. 2 million people lost their jobs the past 6 months, and all 2.5 million, in fact, are from the private sector. Our per capita GDP in South Africa, it will collapse this year, contract by about 15% or so. But it's nothing new because for the past 5 years, the South African on a per capita basis, we've been getting poorer. So it's not the lockdown certainly exacerbated things, but it's nothing new. It's been happening for the last couple of years already. My first impressions is that the power has shifted away from the Minister of Finance. It's certainly now the union buildings. The president now seems to be doubling as the finance minister as well. Treasury has been weakened recently, we know that, and there's a fight has been lost. Tito Mboweni has lost the fight of reason, the fight of prudent fiscal stance, and is lost against Pravin Gordhan, the socialist, the spendthrift. And so there was, let's call it a shift to the left, if you look at the budget, without a doubt. A few things on the president's plan. It centers around infrastructural spending. He wants to keep 800,000 people busy before the end of, by March next year. And I say keep people busy because this is not real jobs. This is just keeping people busy. And then he needs a lot of money. Things like, for example, extension of the grants is going to cost us a couple of billion extra and so on. So that is the plan of the president, and the Minister of Finance needs to find the money somewhere. The budgetary process, I think it's important to understand that. A budget like this, with the numbers that we've seen yesterday, doesn't mean anything, or doesn't mean much, simply because of the very volatile environment in which we find ourselves, economic and political environment. This is not a zero-based budget. We really do need a zero-based budget where we start literally from scratch. They built on what happened last year, kind of. So this is not really a zero-based budget. And this was not, in fact, a budget. It's simply an update on what's been going on the fiscal accounts up to now. So let's see what's going to happen in February, but I'm not holding my breath. And state-owned enterprises just remains the tail that is wagging the dog. Taxes, tax morality on a very low level. There's something called, we call it tax elasticity or tax buoyancy, which is very clear that people do not want to pay taxes. They aggressively structure their tax affairs. The reasons are very clear and very easy to understand. The economy has been dead. People, if you don't pay taxes, if you don't have an economy, if you don't have an income, and secondly, people say, listen, I'm not going to pay tax if the money is going to get stolen in any event. So the Minister of Finance wants to improve tax buoyancy over the next couple of years, which means that we will have to improve the capacity of Treasury, and we know Treasury has been badly damaged the last couple of years. And in the meantime, the budget basically shifted to the President. I think there's going to be a so-called solidarity tax next year. It will either be by way of an increase in the personal income tax. I think that is more likely, but there's a possibility of the introduction of a wealth tax, which is going to be of course, politically preferable, but in practice, it's very difficult to implement the wealth tax. A few major numbers. The important thing here, if you look at the numbers, each and every time the numbers deteriorate. Now, this is just GDP numbers. Look at the GDP numbers. In February, the minister said we're going to see some economic growth. In June, the minister said, no, we're not going to see any. It's going to be a contraction of 7.2%. Now it's 7.8%. My estimate, by the way, is for 11%. The point I want to make, every time the Minister of Finance produces new sets of some numbers, every time the numbers deteriorate. The deficit initially 6 or 7%, then 15%, now 16%. I think 18 is closer to the mark as a percentage of GDP. And again, look at the debt numbers. Initially, if it's 65%, supposed to stabilize at 65, then it turns to 82% and then 83%, which I think is wrong, by the way. I can't see how the debt levels can remain the same while the fiscal deficit went up. So maybe that's a typo, or maybe they're planning to use the existing cash balances. But I think 84 is probably closer to the mark. We've lost 2.5 million jobs already, and we've closed down 100,000 businesses. So the point, really, the important point, these numbers are what, I mean, doesn't mean my numbers are going to be right either. The point I want to make, every time the minister is looking at the budget and he's revising his estimates, every time the numbers deteriorate. I'm going to show you some numbers on that later. State revenue is not only the private sector that's taking the knock. State revenue also collapsed in the current financial year. This is state revenue to GDP. And there was a collapse in state revenue across the board. All the major tax revenue items came in significantly below the estimates, or likely to come in significantly below the estimates of the Minister of Finance originally. This is the composition of the various taxes. The most important one is personal income taxes, about 40%, followed by VAT, about 26%, and in company taxes, approximately 16-17% of total tax revenue, and a couple of smaller other taxes. The only tax increases that can make a difference here, if you want to get in more money, must be one of those three major taxes. Company taxes is just not an option because it will undermine economic growth. So it means it must be either individual taxes or something similar like a wealth tax, or it will be on VAT, which I believe could be in fact considered. So it's possible we could see a VAT increase and perhaps personal income tax increases. Now, this is a track record of government, of the Minister of Treasury the last couple of years, and this is how much tax revenue came in below the original budgeted estimates. And you can clearly see from the fiscal year 14-15, every year their revenue collections came in below budgeted estimates. And the current financial year, they expect their revenue to be about more than 300 below. I think the actual number is going to be about 330, 340 or so. But the point is, every time the estimates are below budgeted estimates. So how is it going to be different going forward? Some tax changes. I remember I tried to read between the lines, and this is what I've picked up. So the Minister of Finance said the revenue will be, this is in a written text. He said it's going to be 330 below the budget. Like I said, I think it's probably going to be 330 or below the budget or so. There could be an increase in personal income taxes, could even be an increase in VAT. The total VAT collections, according to the minister's documents, goes up about 20%. It's not the VAT rate, it's the total collections and VAT. So that tells me that they may be considering an increase in the VAT rate. maybe 1% or so, because other taxes have been exhausted. But I also believe there will be an increase in personal income taxes, that the actual rates, a so-called solidarity tax. Possibility of a wealth tax certainly is there as well. Capital gains tax, I think there will be some changes as well. Estate duties, those are all capital taxes. Fuel levy certainly will go up. Sin taxes, which is going to be a mistake if you increase sin taxes, because you're simply going to drive that underground, the cigarette and alcohol industry. And they had a wonderful opportunity to establish themselves during the lockdown. Spending, this is what we can do. We need to cut back on spending. And if you cut back on spending, you must know that you're cutting back on spending on people. And if you give people less money, people get angry. So you have to cut back on the wage bill. And we already heard that the trade unions are threatening to go and really trash the streets. So it's inevitable. There will be some conflicts. It's probably going to happen soon. And you have to cut back on state-owned enterprises, spend less on state-owned enterprises. And that also means spending less on people. So inevitably, there will be some sort of clash. And the real bad part is that if we spend less, because we have to spend less, the money, we ran out of money. And if we spend less, it will have a negative impact on the economy in the short term as well. This is spending, what's been happening to spending as a percentage of GDP. In the red line, the last one, there is the current financial year. And as you can see, there's just the spending is just simply running away. And we have to turn that around, and we have to turn that around quite a lot in order to save the fiscal accounts. On the wage bill, 40% goes to the wage bill. When the minister is talking about a cut in spending, it doesn't mean a cut in spending. It simply means that he's not going to spend the money that he was planning to spend previously. So there's no real cut. And also the minister assumes that he's going to win the court case currently with Kusatu. They're currently in court. I'm not so sure about that. And he's even talking about wage freezes or even a cut for senior servants. Well, it's a good sign. Whether he's going to be successful, I don't know. And try to take money away from the teachers and the health service workers and the other civil servants. Yeah, I'm not so sure it's going to work, but that's what must happen. I don't think they will actually do that. I've just calculated quickly that the average civil servant in South Africa is earning more than 400,000 rand per annum annually. 400,000. Not a bad salary. And also keep in mind the 2.5 million private sector workers lost their jobs this year, 2.5 million of them, and not one single civil servant lost their job. And they are paid more than 400,000 on average annually. The so-called the crocodile's mouth, the deficit. Now, many left-leaning economists and politicians talk about austerity. This is not austerity. If you have a huge fiscal deficit, it is expansionary. The state, in fact, is this saving to the tune of about 500 billion annually. So the state is a massive destroyer of capital. So that means they're borrowing long-term money to spend on short-term current expenditure. And the state is consuming all the available savings in the economy. So they're borrowing all the available savings in the economy, making us totally dependent on foreign capital inflows if we want to invest. You can't invest because there's no money left after borrowing from the state. This is the numbers in June that the Minister of Finance told us. The left-hand side is state expenditure, state revenue, so the gap between the two is the fiscal deficit, and that's the crocodile's jaws. This is June's numbers. On the right-hand side, the minister told us he's going to stabilize state debt at 87% of GDP in the year 23-24. That's what he promised in June. That is what, three months ago or so, 3-4 months ago, and now he's changed his mind. This is not what it looks like now. He says, no, we're going to cut back on state spending quite a lot, and we're going to increase revenue, and we're going to close the crocodile's mouth. Question is, will it be successful? I am not so sure. This is interest on state debt. It's been going up relentlessly. Remember, if debt goes up, then of course your interest payment goes up as well. The single fastest growing item in the budget, expense item, is interest on state debt. That's going to keep on increasing. And then you can't cut that because that is something that you have no control over. If you owe money, you have to pay interest. You can cut back on other things if you have the political stomach to do that, like wages, for instance, but you can't cut back on debt servicing cost. And if debt servicing cost keeps on going up, you have to cut back on something somewhere. That's where we are. We literally ran out of money. This is the fiscal deficit. This is just to show you what is happening. My calculations in the current financial year, I think it's going to go to 18% to GDP. So the worst ever. We've never seen anything like this. I did say that all the savings is being consumed by the state. They're borrowing all the available savings in the economy, making us dependent on foreign capital inflows. So far, they've borrowed some money at some places. The World Bank, that's spending. The World Bank is a bit concerned about wages, and they said nothing to the SOEs. So you're not going to get that money until you might prove to us that you're not going to waste the money on the SOEs, state-owned enterprises. So I don't think we're going to get that loan because Tito Mboweni just announced more money on South African Airways. We got 1 billion from the BRICS Bank, and he's planning another billion from the BRICS Bank, by the way. We got $4.3 billion from the IMF. We probably will have to go back to the IMF sometime soon. This time there will be many strings. 5 billion we got from the African Development Bank, 50 million from the World Bank. Yeah, and I just want to make a comment. People are quite happy to lend money to the state in the short term, if you pay the money back in the short term, but people are getting more reluctant to lend money to the state on the medium longer term. So long-term yields are significantly higher than short-term yields. So the yield curve is very steep. That's a sign that people are very concerned about long-term borrowing to the state. And then he wants to borrow another billion from the BRICS Bank. Yeah, this is a debt trap. We're finding ourselves in a debt trap. It's going to be extremely difficult to get, and it's going to keep on getting more difficult by the day. Record high levels of debt, state debt. You have to add the debt of the state-owned enterprises. That's another more than 10% to GDP. Interest going up. It will probably lead eventually to prescribed assets, and the interest payment is nearly 5% of GDP today as it is. This is our debt to GDP. This is my estimates going forward. I think we're probably going to see debt to GDP in the fiscal year 24-25 breaching 100%. The Minister of Finance says it will stabilize at 95. I don't believe it. I think it's going to be worse than. Okay, that's that. I showed you a little bit earlier what Tito Mboweni promised 3 months ago, and this is his new promise. State debt to GDP will stabilize at 95%. Like I've said, I don't believe that, and many reasons. My estimates it's not the same as that of the Minister of Finance, but more importantly, they've been wrong every time the last 5 years. So why should I believe this estimate? Anyway, even if it goes to 95% to GDP, this is seriously bad numbers. I'm very concerned. So how can we get out of this? We can increase taxes, which are we going to do, but it's just not a real workable option because there are very little scope to increase taxes. We have to cut spending. That's the only option. And that means grants and money spent on people. And that's politically very difficult to do, of course. But the most important thing, we need to grow the economy. And I'm afraid, looking at the policies in place currently, we're not going to grow the economy in any event. But even the economic growth estimates of the Minister of Finance is for quite weak economic growth. So even the Minister of Finance doesn't believe that the economy is going to grow. Next year, the economy is probably going to grow, but it's more of a dead cat bounce kind of thing. In other words, it's base reasons. Because this year is so horribly bad, next year is going to look a little bit better, but it doesn't really mean the real growth. It's just a dead cat bounce. The debt plans is planning to stabilize the debt. Remember, this is not all the debt that we have. We have to add more than 10% to state-owned enterprises, and then there's contingent liabilities of 200 billion at the credit guarantee, for example. And the road accident fund is running a deficit of about 600 billion. Oh, what a disaster. Okay, some of the other parasitals that could get some money eventually. The NEL wants another 2.6 billion. South African Airways just got 10 billion, but they will need another 10 billion. So this is not the end of South African Airways. If they're really serious in letting that thing fly, there will be more money needed for that. In the meantime, people going to bed hungry, and we spend 10 billion, another 10 billion, another 10 billion on South African Airways. Oh, just explained it to me. I can't understand it. PRASA is in trouble. Post Office is in trouble. SABC, they got 1.1 in February. They want more. Transnet, is made a small profit, but if you actually account for the crumbling assets, the capital, if you account that in a proper manner, then they've actually made a loss of about 18 billion the last financial year. Airports company, they want more money. Sunroll wants more money. They're probably going to get about 300 or so million in the budget next year. Land Bank, what a disaster. They got 3 billion in February. They probably will need more. Land Bank is lending about 30 billion less than a year before because they ran out of money. There's about 6 billion debt, land bank debt, that's guaranteed by the state. You have to add that to state debt. They want the 10 billion over the next 10 years. They're losing some of their best customers to the normal commercial banks. And that, of course, creates questions about food security and so on. This is now, I don't like state-owned enterprises. This is one state-owned enterprise that we can't just let go under. We have to, I don't know what we can do here, but if we simply close down the land bank, then a lot of farmers will not get funding, and it will affect food security in South Africa. That's the sort of troubles in which we are in. Eskom, nothing really on Eskom, but Eskom needs to get 250 billion from somewhere. I don't know where the money is going to come from. More announcements. The minister did mention that the Section 28 of the Pension Funds Act will be amended to making it easier for people, or to making it easier for pension funds to invest in infrastructure. It doesn't mean it's prescribed assets, but it's probably opening the door for prescribed assets going forward. The Pension Fund Act will also be amended to make it easier for people to withdraw their pension funds even before retirement. I think it's a good idea. And then he did mention something about forex controls, just in passing. I've got a suspicion foreign exchange regulations will be tightened sometime, maybe next year. Just a few, be careful. Now, obviously, what I've just told you about the South African economy and the budget, you should be very concerned. But don't think it's a one-way bet. Remember, our bonds are very, very attractive. The yields on the bonds are very, very high in South Africa compared to other countries. The rand is very cheap, and our markets are very liquid. So a speculator wanting to take a bite out of the apple, South African bond market is certainly a place to be, but we're not going to attract long-term capital. So it's certainly possible for the rand to appreciate suddenly and for the bond yields to come down suddenly, but suddenly it will probably depreciate again. So what I'm saying, expect a lot of volatility in the bond market and the rand market as well. The same goes for the rand. This is a better economic plan, I believe. So instead of planning more spending and trying to keep 800,000 people busy and all that, what I would do in my economic plan is just to do what you're currently doing, just do it better. A very good example is the local authorities. So now we're going to spend money on people to clean the parks in our towns, but this money is going to go via the local authorities, which are, half of them are functionally dysfunctional. So that money is not going to be spent properly in any event. So the best, and it's going to be supportive of economic growth if we put the measures in place to let the local authorities work properly. So that's what we have to do. Start where it matters and do the things that you're doing currently. Just do it well. That's the way to fix. And that's an economic growth plan in itself. The same goes for the provinces and the national departments and so on. So don't improve efficiency and don't just try to spend more money. We're not going to spend ourselves out of this hole. We have to spend better. That's what we need to do, and more efficiently. And I've mentioned this a couple of times before. We have to find an easy win. And an easy win will be, what about the road safety campaign? That will in itself be good for the economy. Get everybody to stick to within the rules of the road. Just do that. It's not going to cost us more. You will get universal acceptance. Everybody will accept that. And if you are successful, you will at least have a win, because there are no wins at the moment. The state is failing at just about everything. Pick something easy and do that right. The best and worst ministers of finance, I think Mr. Manuel, he wasn't bad. He had some luck on his side as well. Gordon was a disaster as a minister of finance. He took over state debt when it was at 50%, or rather 25% of GDP, and he increased that, he doubled that. and there were a couple of in-betweens, but essentially it was from Gordon to Tito Mboweni, and he passed a very hot potato to Tito Mboweni. Tito Mboweni has been set up to fail as Minister of Finance. Some personal advice: know what is going on, identify your risks, manage your risks. We've run out of taxpayers already. We've running out of capital. Eventually, I think prescribed assets will become a reality. I think foreign exchange regulations will be tightened up. And that means only one thing left, and that is for inflation to take hold. So I'm afraid we are probably heading in a few years' time, not that maybe 1 or 2 years' time, inflation is probably going to start becoming a problem. Unless we fix the fiscal accounts, and I don't think we will be able to do that. There's my email address. Anybody want to send me an email or question or whatever, I'm happy to answer that. So there's dawieroodt@efgroup.co.za. If there are any questions, I'm of course very happy to take those. Let me just see if I can get back to the presentation, wherever it is. And if there are any questions, I'm more than happy to take those. Thank you very much for listening to me.
Thank you very much, Dawie. I think always very insightful and sobering. We do already have 2 questions, and if anyone else does have questions, please do feel free to post those in the chat on YouTube. If you are watching this after the live stream, please also know that you can contact myself or Dawie with questions. I'll post both our email addresses in the description below, so you can contact us at any point. So Dawie, we've got 2 questions from Henry van Zyl. The first one, he's seen an argument on Twitter claiming that the Reserve Bank can print money as long as the balance of payments remains in the green.
The Reserve Bank can print money whether we've got the balance of payments in the green or the red, it doesn't matter. The Reserve Bank, we don't have a gold standard anymore. The Reserve Bank has got a little machine called the printing press, and they can print money. In fact, that's exactly what the Reserve Bank is doing. Although under the control, the management of Lesetja Kganyago, the Reserve Bank has been quite responsible. I think he's doing an excellent job. But you don't need a surplus on your balance of payments to be allowed to print money. If you have a surplus in your balance of payments and you create a little bit more money, that is, of course, a much better scenario than having a deficit on your balance of payments and printing more money. But you don't need a surplus. It's just better on the circumstances of a surplus than on the circumstances of a deficit.
Okay, and then the second question, have you noticed any increase in shadow banking activities, and what impact does that have on the integrity of the banking sector?
The banking sector in South Africa is perhaps over-regulated, but it's very, very healthy. I think the banks already are starting to experience some bad debts, and the banks are not in trouble at all, but certainly the profitability of our banks is coming under pressure because of the current economic environment. Some shadow banking activity, yes, I think there are some signs of shadow banking activity, quite a lot of that. It's not necessarily bad. Whether that is potentially can potentially threaten our financial stabilities, especially the banks, I don't really think we are there. What we have in South Africa is completely different from places like, for example, in China, where their so-called shadow banking is much more active and much bigger than what we have in South Africa. In South Africa, in recent years, what we have seen is people are borrowing more from, say, for example, retailers and the like than previously, but I don't see that as a threat yet.
Thanks. And then I just had a few questions as well. The first one, how did the markets react? Was there any serious swing or not? Is it all, I guess, priced in, as one would say, already before he delivered his speech? Was there any sort of signals?
Yeah, the important part is that the market already discounted much of this. So what we saw yesterday is not really news. The market did react a little bit negative. I see the rand's currently trading at 16.40 to the US dollar. So there was a bit of a negative reaction, and rand lost a few cents against the hard currencies, and I see the bond market also weakened a little bit. But this morning, it continues the weakness. I won't describe this weakness entirely to the budget. There are some international factors at play at the moment as well. But the reaction on the market was negative, and this morning it continues to deteriorate.
Okay, our next one is about attracting dollars. Do you think South Africa should focus on attracting or generating dollars? And if so, how will that benefit South Africa?
Yeah, there's only one way that you can generate dollars, or well, two ways. You can borrow dollars, which is not sustainable because you have to pay that. We've just borrowed a lot of dollars. There's one way.
Unless we borrow Zim dollars, of course.
Well, I assume US dollars. The other way of accumulating dollars or getting dollars will be through a balance of payments surplus, of course. And one good thing about the lockdown is that we're forcing many of the balance of payments accounts, like the trade account, into a surplus recently. And a weak rand, of course, that's a benefit of having a weak currency, is that imports are discouraged and exports are encouraged. Unfortunately, total economic activity has been down the tubes as well. But yeah, it's a good idea to try to run a current account surpluses as well.
A question from Brian Scallon. Tito said the multiplier effect of spending R1 caused 1.6 in increase in GDP, but now it's less than R1. What are the mechanisms that have caused this?
Yeah, the short answer to that is probably the increase in debt. Now, there's a lot of research that has been done on this, and the academic research seems to suggest that you can keep on spending money and you can keep on accumulating debt until you reach approximately debt to GDP ratio of around 60%. When you get to 60%, then and you accumulate more debt, then that process of accumulating debt, in other words, borrowing, has got a negative impact on economic activity. Now we passed that 60% mark, and we're probably going to go to 100% or so. So I would say that the basic answer to that is simply that the state is crowding out the private sector. So if the state borrows all the existing money, there's very little money that the private sector can borrow. And that means, of course, that the productive side of the economy, the private sector, will underperform. And we know that the state is not a very good performer. So I guess that the accumulation of debt has to be blamed for that multiplier effect dipping below 1.
Thanks. And then a last question from Henry, and then we'll wrap up. How can South Africans hedge against inflation?
Many ways that you can hedge against inflation. A good idea is to invest abroad, as an example. You can buy gold. There's another hedge against inflation. You can buy rand hedges locally, like Rembrandt, for instance. So those are the rand hedges. Fixed property is usually a good hedge against inflation as well. My advice to people would be to make sure that a substantial portion of your assets are invested abroad. So that's what I do. That's my job. I take people's money out. I help them with taxes and tax clearances and structures locally and internationally and so, and take the money out. So it's not only a hedge against a weaker currency, a hedge against inflation. There are also more investment opportunities internationally. There are a couple of pitfalls. Be aware of those. But yeah, so I take money out, and I prefer to take money out than to hedge it locally, because I think we're probably going to see foreign exchange regulations soon. And when the money is still locally or still in the country, then you always run the risk that the politicians may get their hands on that money. So my advice to people, take it out. That's probably the best hedge against inflation.
Okay, and then just to wrap up, Dawie, a question from me. The president, he's talked a lot about this much vaunted infrastructure drive and infrastructure spending and that sort of thing. And then again, we go and spend 10.5 billion plus 6 billion on SAA. Playing devil's advocate, are there any good infrastructure plans that the government could look at implementing that could actually help stimulate things? Or do you think you could probably say the government is giving jobs to people by giving them a shovel and saying, dig a trench kind of thing. That's a government job. But what do you think, playing devil's advocate? Are there any good infrastructure plans one could have?
Yeah, sure, certainly. I can think of a number of things that we can and should have. Like, for instance, I don't have a major issue with Eskom. We need electricity, building power stations. I think it can be privatized. The issue is not really whether we should spend on infrastructure or not. I can think of many things that we can do. We can improve the roads to start off with. The problem is that we need an efficient state to do that, and we don't have that. And that is a far bigger drain on the economy than even corruption. Of course, corruption is bad and it's having all sort of negative consequences and effects on the economy. But simple inefficiencies of the state is by far one of the biggest drains on the South African economic growth performance. Let me give you one good example. We spend more money on education than most countries in the world, but the quality is not only bad, it is of the worst levels of education in the world. That is nothing but infrastructure. It is human infrastructure in a way. It's capital formation, it's human capital formation. And we're horrible at that. So yes, in principle, for the state to spend on infrastructure or even human infrastructure or capital, nothing wrong with that, but you must do it efficiently. And we're just not doing it well. That's simple answer.
Thanks, Dawie. My silver bullet solution for the whole corruption story is simply the bigger the government grows, the more opportunities for corruption there are. So the more involved your government is in the economy, the higher the chances. So, but of course, that means limiting the size and scope of the state.
Yeah, the good news. I mean, I've been sharing a lot of bad news with you this morning, but there's some, in a weird kind of way, the good news is that we've reached a point now where the money it's finished now. And if the money is finished, that the only alternative is to spend less. There's no other alternative. So maybe that is the silver lining. And there's another silver lining. We've seen this already. We're going to see all sort of interest groups clashing now. We're going to see COSATU clashing with the ANC. We're going to see the state clashing with the ANC, with government. We're going to see the taxpayers clashing with the Minister of Finance. We're seeing all these different interest groups now at war with one another. So in a way, that's the good news, because hopefully the tail that wags the dog, and that's COSATU, hopefully we can do something about that now.
Thanks, Dawie. I think that was our signal to end. But I have to thank you very much for your time again, for your insights, for talking to us here at the FMF. We greatly appreciate it. Viewers and listeners to you, thanks very much for giving us your time. Of course, thank you for giving us your support, especially throughout this very difficult year. And if you can, please continue to do so. You can go to the FMF website to look at providing financial support. Apart from that, please continue sharing our articles, our media releases, our reports and submissions. We greatly appreciate your assistance as well. Dawie, I think we'll wrap up there. Thanks so much for your time, and hopefully we'll talk again very soon.
Dankie, Chris. Lekker dag.
Tot ziens.